Crypto markets today. BTC, ETH hold gains as Aster's leverage-fueled volume hits $64 billion. BTC and ETH edge higher as derivatives metrics flash a tentative bullish tilt, while new DEX Aster grabs $64 billion in daily volume with extreme leverage despite weak token performance. Crypto majors BTC $113 for 31.92 and ETH for 164.03 rose on Tuesday as the market begins to consolidate following Monday's recovery. Bitcoin is trading at $112,900 while Ether is at $4,150, adding 0.78% and 1.1%, respectively, in the past 24 hours as futures open interest jumped from $29 billion to $31 billion in a sign of bullish bias. Much of Tuesday's activity is occurring in the altcoin sphere, with newly touted decentralized exchange Aster racking up $64 billion in daily trading volume as traders rush to use the platform that offers up to 300x leverage. Derivatives Positioning by Jacob Joseph. Token Talk by Oliver Knight. The market is showing signs of a potential shift back to a bullish bias as derivatives metrics, including open interest and basis, show a pickup. Overall, BTC futures open interest rose to roughly $31 billion from a recent monthly low of $29 billion. This increase indicates a renewed interest from traders, with Binance still leading at $12.7 billion. The 3-month annualized basis is also recovering, climbing to 7% from around 6%, which makes the basis trade more profitable. The BTC options market is still presenting a complex and somewhat contradictory picture. While the 25 delta skew for short-term options continues to drop, suggesting traders are paying a premium for puts and signaling a desire for downside protection, the 24-hour put-call volume is telling a different story. In a clear reversal from recent trends, calls now dominate the volume, making up 65% of the contracts traded. This sharp increase indicates that despite the cautious sentiment reflected in the skew, a significant number of traders are actively positioning for a short-term rally. This divergence highlights a highly polarized market, where a mix of hedging strategies and speculative bets creates a state of mixed sentiment. Funding rates on major venues like Binance and OKX have turned positive, rising to around 7% and 10% respectively. This indicates a growing appetite for leveraged long positions, where long traders are now paying shorts, a classic sign of positive market sentiment. While the funding rate on Hyperliquid remains volatile, the trend on key exchanges suggests that traders are once again becoming confident and willing to take on bullish. ExposureCoinglass data shows $316 million in 24-hour liquidations, with a 44 to 56 split between longs and shorts. ETH, $73 million, BTC, $70 million, and others, $29 million, were the leaders in terms of notional liquidations. The Binance liquidation heatmap indicates $115,000 as a core liquidation level to monitor in case of a price rise. The derivatives exchange battle between Aster and Hyperliquid is heating up. Daily trading volume on BNB chain-based Aster has rocketed to $64 billion, dwarfing Hyperliquid's $7.6 billion, Defilama data shows. According to Bolt Liquidity Core contributor Max Arch, the shift is due to Aster's offering of between 100x and 300x leverage. Hyperliquid's markets are mainly capped at 40x. Traders are following the leverage, regardless of underlying platform quality, but we'll see how the increased risk that comes with higher leverage caps impacts platforms like Aster long-term. Arch wrote on X.Arch notes that around 6% of Aster's trading volume can be attributed to wash trading, far less than some skeptics had estimated. The exchange's native tokens, Aster and Hype, have performed poorly over the past week, with the former sliding from $2.39 on September 25th to $1.80, while Hype is down from September 18th's high of $58.92 to $44.32. The bearish token performance relative to trading activity can be attributed to a wider altcoin sell-off that led to the removal of $200 billion from the sector's total market cap last week, according to CoinMarketCap data.